What's up, guys? Happy Thanksgiving weekend. I guess it's over now. Going into Sunday, November 26th, the last month of the year. A couple more weeks of trading. And if you haven't traded already in December, there is something called the Santa Rally. I want to talk about that for a second. And why I think it's not going to happen. Let's zoom out and let's look at this monthly chart. And if you want, we could even look at the 3-month chart of the S&P 500. I'm using US 500 because I don't have any lines on it. Versus if you go to my SPY chart, you can't even make heads and tails of it. So we're at US 500 for right now. So the numbers are going to be a little bit different. 45.47 versus if you look at SPX, 45.60. So they're a little bit different. And we can use SPX. That might be a little bit closer to SPY. Here's what I want to talk about is this guy right here. They have yet the high of this candle. This was 2022. Now this is a 3-month. So this is a significant candle because if you take the 4-quarter average, you might not have heard this before. So this is a 3-month chart, which is a quarterly chart. And as you can see, in the past, whenever we get below this average, we close a candle below. This is where the Federal Reserve would print money to push the market back up. You can see they got below it and they pushed it back up. They got below it here, 2018, I think this was, or no, yeah, 2019. 2018, yeah, the last quarter, 2018, and they pushed the market back up. Obviously, the COVID crash, they pushed it back up above this 4-quarter moving average, right? You can see how important that is on the long term, as long-term investing goes. If you go back here to the dot-com bubble, we had 2 quarters, close below the 4-quarter average. That means half of the year was bearish, and we had the dot-com bust, right? We had 1, 2, arguably 1, 2, and then we had the 2008 market crash, right? Then the Fed decided every time we close below the 4-quarter moving average, we're going to pump it back up. We're going to pump it back up, right? Pump it back up. They have done that from 2008, 2009, all the way till COVID. The importance of this candle right here and these 2 candles is for the first time since 2008, they closed 2 months below and they did not declare a recession. At the same time, they actually closed 3. If you look at this one, there's 3. 1, 2, 3. The importance of this candle, this is the make or break candle of 2014. If we can successfully close above this candle, as we are above this now, I believe we can continue higher. And we just have a simple retest and, break through, come back and retest, and you can continue to add to your long-term portfolio. If for some reason we cannot close above this, look for another retest of the lows. That would be a humongous move. Let's see. First of all, let's do this. The high of this, now remember, this is SPX. The high of this candle, the high is 45.93.45. Let's draw a line here. I'm doing this with you. 45.93.45. That is what the bulls want to close this year above. So we have a month to do it, and we're already right there, right? At the same time, we have all of these people wanting to get out of the market again at break even. We saw that right here. We got above this line and we sold off. So they're running another test to see if they can get above this line. And if they can close the month above it, they don't even have to close above the high. If they just close above this line, then I would say, okay, bull, let's keep going, right? Because we are above. We've spent 1, 2, 3 now months above. Looks like we're probably going to do the fourth. So the reason this is important is because this is also the first time since 2008 that the Federal Reserve is not printing. Supposedly they're not printing, right? We had the banks crash. I don't remember exactly when that was, whatever. And they might have started printing again. We don't know that for sure. Now, we have a lot of fundamental things going on right now too, like interest rates. We can go into that. We can look at how the charts tell you before the fundamentals what the move is going to be, right? I mean, you can't make this up. This is considered a breakdown candle. They ran a test of the breakdown candle and failed. They're running one more test of the breakdown candle. They will likely fail before they even get to it. That's just kind of how the market works, because people that got in short here are going to want to get in short again right here and add to their position lower. So we'll see. We have 4 weeks to do it. The difference is December we have the low liquidity month. People aren't trading as much. They're waiting for January to rebalance their funds and all that stuff. So we might just kind of chop around, and then if we were to get a Santa rally, we would try to attempt to push that one more time. But I have a feeling that the top is in. And I've shared before this idea of the chart of, you have a radical blow off top here. Now I'm probably on logarithmic, so this doesn't look as crazy as it actually is. I mean, you zoom out, that's a crazy move, right? That was the 2008 crash. That was the 2008 crash compared to where we are today. So if we had a 50% retracement from where we are today, just to from the low to the high, we'd be seeing around here, above COVID lows. It's funny that COVID lows just happen to be a Fibonacci retracement number there, isn't it? But you're still looking at 2,700. So again, if we close above that, and then their ultimate target before ending is around the 7,300 area in the SPY. 730 SPY would be a pretty good place to get out of the market for the next pullback. But I'm just not sure that's going to happen. So anyway, just kind of a target. This is where you'd want to re-enter the market long, anywhere around here. Even a double test of this 2265 area would be a good place for some serious support for the next move higher to 700, 7,000 S&P. So anyway, we'll see what happens this December. Let's look at a couple other ideas real quick. So what this means. why I think that was the top. Let's go ahead and look at SPY. And I'm going to zoom in. So that's the 3 month, right? Let's go to the daily here. And let's see what's been going on. So we had, I know this is hard to see, but I had right down here, so we have this area here, let's use my little boxes here. So we had this little area here, right? Run this over, and you say, okay, that was actually a good area to buy. That was some consolidation over a breakout area, right? You had some consolidation here. It broke out above it and failed. It got rejected and failed. They failed there, rejected. So when they get above it this time and come back to retest it, it's going to be support, right? So yeah, we had a huge bounce, humongous bounce. And let's see, what did we do here? We chopped around for a couple days and then went higher. You could kind of say this whole area, probably this area, we kind of just gapped right through it, right? So if I was trading this, I would say, okay, now let's look at this gap here. There's a gap in liquidity right here. That means there's not many buyers and not many sellers. They just gapped over that area. So they would normally just move through it very quickly. The fact that they didn't and they're finding resistance here, to me, tells me at least the top of this channel, which, what was the low of this candle? 45.67, and the high of this candle, 45.68. So the gap is closed on this one. So you could trade against this candle right here, and high of 45.68.43. That would be your stop loss for shorts. Anything in this area, if you're getting far enough out, we should come and retest at least this area. They're going to try to run a test of this breakdown candle. They're going to try to get down here at least. So that would be your target for the first couple weeks of December or the last week of November. We're going to run a test of this candle. They're going to see if that's still strong. If that one fails, if we close below that, then they might have another day of a pop, and then they're going to run a test of this candle, right? So if they break the bottom of this, 45.60, they're going to come down here to, or not 45.60, I'm sorry, 45.10. Then they're going to come down to this low 44.60 area and run a test. If they can do that, then again we have this gap which they can easily fill, and they can run a test of that. So we could get a pretty legitimate move from, if you just make your stop this day's candle, 45.60 or 40. Sorry, too many numbers. Okay, so let's go SPY, because I know you guys do SPY. So the high of Wednesday's candle, or was that Wednesday? Yeah, because Friday was a half day. The high of Wednesday's candle was 456.38. I do have a line at 456.85, but they did come up short, and they're checking this 455.11 number. So you could basically just say, and you could even give it some room, 456.85. Anywhere in this area, anywhere inside, because we had an inside day, anywhere in this candle, as long as you make this your stop, or even 456.85 your stop, you could swing puts. And your first target is going to be this 450 area, and your second target is going to be 446. If they take out 446, then we have a nice gap down here to 441, because if you look in the past, there's been not a lot of stuff going on between these two areas, this green line and this white line. It's pretty open, right? So, you could be safe to say 446 is your target for swing low. If they start getting below 441, then we know, and they're probably going to try to run another test by the end of December. So that might be your Santa rally. But I'm going to have a hard time believing that they're going to put in a new high, or even getting above this 457 area. So let's say that's the plan for now. I took 450 puts on Friday. They were pretty cheap. I expect them to probably print by Monday or Tuesday, because they're going to run a test of this low. Right. I think I chose 1128, so you got plenty of time to get in there. They'll probably print, and if they get below that, then 446 is going to be your number. Let's see if there's a catalyst, because we know that price already tells you what's going to happen, but we can see if they are going to use some news to do that. Monday, there's no news. Recently, in the last few months, no news is actually bearish when there's no news. So they might sell off on Monday, and then on Tuesday, if they had some news here, we have some Fed stuff, they might try to shoot it back up and see. Look for Wednesday, 2 o'clock Eastern. Look for a change in direction of the market there. You have some small news here, but mostly no news. So when there's no news like this, now we got Friday at 11. That would be December 1st. That would be interesting to see how they close the month. Because they can always close the month above the high without closing the quarter above it. So we'll see. But basically, if you want to know where my lines come from, it's mostly the 4-hour chart. Sometimes it's the weekly chart. If you look here, let's see. Well, I mean, even the weekly, you've got some sellers, obviously, right here, right? That's what pushed the market down. Daily. I think it was this candle. That might not even be a real line. I don't know. Let's see if that was a real line. Yeah, maybe this candle, that's where they reversed. So, anyway, I'm interested in swing inputs for a back test of the 446 area, and let's do that. I told you guys to look at ELF. This was actually a long idea, and then I thought about it, and it might be a short idea. If you look at the weekly, no, it was the monthly. If you look at the monthly, that's why. Let me change this. I always have this set to 50. That seems to be the strongest. Simple moving average, change it to 50. I don't know why it's not wanting me to work here. Anyway, so it was a long idea at first, because I was kind of looking at this it was the weekly, I believe, and the 50 kind of came down and touched right here, and so I just thought, being a 3-bar play type move, you getting over 117 should push this up, and this is kind of an area of a lack of liquidity. You see these huge moves, so this might still be a good idea. See these huge moves though? There's not a lot of buyers and there's not a lot of sellers in this area, in this liquidity gap, right? until you get to about this area. And then you could say the sellers come in. So from here, over 117 to 132, that would be a huge move higher. If you wanted to mess around with this, ELF, I figure, might be a Christmas stock. It's also a beauty stock, and they typically do well in bearish markets because the theory is people start feeling depressed, and so they buy things to make themselves feel better, like makeup. You can call me sexist if you want, but I just follow the charts. Over 117 should shoot up to 133 area fairly quickly, and we'll look at that on Monday to see what the option prices are for that. As far as a short, you would just short it under this candle, and again, this is weekly, but you had all this resistance down here. So if these sellers come back in, and this is a seller, then look for a retest of this break up candle down here to 95. So it could be a pretty good trade either way, but let's look for a break over it. I talked about Bitcoin stocks. That was a large move that some of y'all caught. I talked about it in the daily chart. I said getting over 106.25 makes puts invalid and it can squeeze. We still have a couple more days of squeeze left. You want to look at Bitcoin though, they're still hovering around our line. They haven't gotten back to where I wanted to get it, down to this area for the next leg higher. They're still rejecting, so at the same time you could go back to coin and say if they get back below our line, if they take out this 110.50 area, then look for a retest of this trend line down here, and which could be a nice $20 move down. We don't have exhaustive buying volume yet, so it's very possible that we open up here on Monday over 120 and then start to dump. So if you're still holding on to it, there's a chance you can see a move higher. However, this is pretty strong seller there. Yeah, this is what we were. Here we go. Let's see what we're doing here. We had this large move down, this large move down, and so we could expect another move at least to retest this area. So anyway, you guys talked about Ulta. That was a nice bounce. We had a line right here. I guess I didn't catch that one, but that's okay. It's got earnings coming up. Let's see what that does. So, this guy's not looking good. We have a move from there down to here. I could see another move from there to retest the 400 area fairly quickly. You'll get a bounce at 451 if you want to try some calls for a day, but I wouldn't hold them because it looks like it's going to retest this area. Nvidia, Apple's got a lower high. They weren't able to break it, and they never did retest this line. So it's very possible that what this is doing here is just going to be kind of a lower high double top deal, and that would be a huge move down to have to retest this line. If they get that low, then they're probably not going to hold, and it's just going to break through the bottom of this one. Another one I found, see if they get down here, and you can see another move like that. If you get down here and people think it's going to bounce, it's actually a liquidity play, and they're going to drop the market even farther. So keep an eye on Apple. If you want to go ahead and get in and make your stop, the high here, you can try that. Apple puts, One that shocked me was Tesla. I really thought Tesla was going to break out, and right now it's looking really weak because we had this nice like retest, what I thought was a retest, and so we had this kind of topping here. It came down, retested it, and we went long, and then they killed it, and that invalidated this line. So, that's no longer valid anymore. So you have to look for a new pattern. And the fact that they didn't even get to this 249.31 is interesting to me, because they should have at least tested that. Try to get this breakdown candle wick here, and they weren't even able to get that, let alone try the other side of this channel. So let's take this line off, and let's keep this in a bear channel, and say, let's say if we had a new top, yeah, that kind of works. So they obviously got above it here, but they didn't actually close above it. So let's say that's the new trend line here. Let's take this one off. So this is the new trend line, and let's say bearish on Tesla until it closes a candle above this line, because if you break this area of support, which they did once before, and that should be buyers, right? But it could just be a liquidity trap. So if they get back below this area, let's look for a pop-up on Monday and then grab shorts to get back to this 217 area. Now I had a line here that said buy the dip or short the dip buyers. I don't know if you guys remember that. So we did here, and we did. They just shorted the dip buyers, and they came up and they held a support, but then they canceled it. So now, really, this 217 area is not important anymore. Really, your support is this area down here, this 203, 204 area. So we want to see a retest of this area right here and see if this holds support. So that could be a pretty massive move, and it could still be bullish if we were to do something like that, because you can see here's definite support. If you want to do my squares, let's look here, from here to here. Well, not really, just to here to 245. And then from here, yeah, they got back to 245. Actually, you could even say it was this candle. See this breakup candle here? So from 210 to 245. So they came up short of 245, but you could see an equal move down back to the 210 area. Right? It could keep going lower, but that would be your target for puts. 210, and you might give it 2 weeks to get there. But anyway, I thought Tesla was surprisingly weak, because I figured we had a massive sell-off here, we had ending volume, so it should have just been bullish from here, broke out of this white trend line and continued on higher, and it didn't. So that's interesting to me that it's got one more leg lower. Let me know if you see any other stocks you're interested in. MSTR, I really thought was going to just rip, and it didn't. It's been having some serious problem over here at this 500 area. So, I mean, it still could. It still could make it up into the 600 area. So you might not write it off yet. As we see over here, we had a nice bounce from 600 to at least 700, or from 500 to 700. So I was kind of expecting, since they came up short here, so when they come up short, that usually means they're going to break it the next time. So it's still possible that we get another squeeze from 500 to 700. So keep an eye on that one. If we get below 500 again, we might look for an equal opposite move down from 500 to 300, which would be this previous support area. And then from there, maybe they can move higher. But watching MSTR both ways, I'm just kind of thinking that SPY is not going to break out. So let me know what kind of thoughts you guys have. I know that was kind of a lot of rambling, but mainly I just think the top is in, and we're going to have some kind of pullback. So I'm not calling the crash yet, but we do still have, if you pay attention to this, and nobody's really talking about this, we have a high, lower high, lower high, and a lower high. So we still have lower highs, even though we ripped up here and then we ripped back up here, right? These kind of moves are also not sustainable. So that could be panic buying because they know this is their chance to get out before the crash. So keep an eye on that. Losing this area again would be detrimental real quick, and then I'll let you go. So let's look at this. So we had, let me draw with a brush. So we had a top, right? It came down. We kind of set up a breakout area here, right? Minus that little guy, but anyway, we have a breakout area. We broke out and we retested it, and we should go higher. We should. If you want to look at how Tesla crashed, their very first crash, not this stuff, but like the very first crash, it was the exact same thing. So, and this is why the crash might not happen yet, because they might want to retest the breakdown. But basically what happened was, and I'll put it on the daily here, it might be easier to see, but so we had our top, right, our blow off top, and then junk chopping for a while. They came down and they broke out of this area. They broke out and they got higher. But then when they broke down from their breakout area. Instead of bouncing for the next leg up higher, they broke down. And then when it came back to retest that became the crash, if you will. And it's just ever since then been in a bear market since that area. So same thing with this. This is the exact same thing. They came down here and built this kind of basing, right? This breakout area, which is surprisingly kind of where we are right now. This is why I'm thinking maybe we should be bearish, because this breakout area, they broke out above it, they came back to retest it, and instead of bouncing, they crashed, right? So they're trying to get back above that same area again, and they're not holding. So they expect this to be resistance now. But that's kind of what I meant. It's like the breakout area becomes resistance. So if you go back to SPX, our breakout area, you have to zoom out for this to see it. Our breakout area would become resistance for a bearish move for the next few years, right? And the top is already in. That was the top. I don't think we're ever going to test that again. So if you see here, this was resistance, this was resistance. They're running a test and they can't even get up to it, even though they panic bought right here. That's because they're going to break this low and put in new lows and be in a bear trend for the next few years, until we get down to probably this area here, 2,500 at least. So anyway, that's what I think. I think the market's done for. If you look at trying to find my chart. my textbook chart. Right? We had the crash, the COVID crash. We had our ridiculous, delusional new paradigm. We had our 2023. Here's 2024, or 2022, 23, and here's 2024, right? And we'll likely take out the bear trap, the COVID crash lows, and then we'll return to normal. So this is where I am in my chart right now. If you look at that, that's basically the same chart, right? That's just kind of where I'm leaning. So it was, if you still have a 401k, I would encourage you to not necessarily sell it, but borrow a couple thousand out of it and get some training in the market, like some real training, like join a firm, not just YouTube people. Our group is wonderful. Jake is wonderful at day trading, but as far as investing, look and see what the big firms are talking about right now, and pay someone to manage your retirement that knows what they're talking about, and invest in your own retirement, because all it is charts. If you look at the 2008 crash, I mean, that was a 50% market correction, right? And everybody sold down here when they took out this low. And then what did the market do? It just absolutely went on a tear for years. So, I expect a 50% market correction. It doesn't mean it's the end of the world. It's probably a good time to buy. Let's see how they took out this low and then they ripped. And of course the Fed helped, but regardless if the Fed helped or not, it was going to bounce there. But if you aren't paying attention to technicals and how the market works, then see how watch this. See how the market topped, and then we had this breakout area, and we got above it, and then we failed, and then that became resistance, and then the true crash happened. I mean, it doesn't look big to us right now, but in 2008 that was huge. People lost half of their life savings, if not more, because when you pay somebody like a 401k or somebody to deal with your retirement, you're not even making as much as the market is making, because you're paying fees. So if you just buy, if you're a long-term investor, if you're just a kid and you're looking to invest in something long-term, just buy shares of SPY, SPY, because in the long run, it's like a 10% return year over year, right? We've had a huge return this year. I was too bearish to make any real money off of it long term, but I mean, we had a 25% correction in 2022, and then look at 2023, we've almost taken out the entire correction, right? That was a huge move. So in the long term, just buy SPY and just be done with it. You don't have to pay these these firms and retirement funds and all this kind of stuff. You just learn about technicals, and if you're a long-term investor, just buy SPY. QQQ, I'm not too sure about yet. I think technology is going to sell off because tech is weaker than SPY was last year. But if you're a long-term investor, and what I would do is, if you're unsure about it, just buy bonds right now because they're paying 5%. Wait and see if we get a retest of this 2,500 area, and then convert all your bonds to SPY shares. And you'll be set for life. Anyway, don't take my advice. I'm not a financial advisor. Let me know if you have any questions. Bye.